welcome to the meeting of March 2nd. It's 5:30, so Jen, would you call the roll?
Commissioner Corbin,
Here?
Commissioner Johnson,
Here.
Commissioner Waldner,
Here.
Commissioner Abraham,
Here.
Mayor Lindsay.
Right, before you have the minutes from February 23rd.
I'll make a motion to approve minutes from February 23rd.
Second.
There's been a motion and a second. Any discussion? All in favor of approving the minutes of February 23rd, say aye.
Aye.
Opposed? Motion carried. You have the agenda for tonight, March 2nd.
Make a motion, we approve the March 2nd agenda.
Second.
We have a motion and a second. Is there any discussion? All those in favor of approving the agenda for March 2nd, say aye. Opposed? Motion carried. Under appearances, acknowledgements, and correspondence, we have Shirley Ebsen here from Lake County with our 2015 assessments. If you're ready.
I am. Thank you very much for having us in this evening. It's fun to be over here and give a little introduction of what's going on and what's changed this year. As the assessment notices hit the paper, we can get some of this information out in front of people and hopefully answer some questions and alleviate questions for coming in front of the commission. One of the first things that we changed universally across the entire county is we changed the format of our assessment notices this year. We've been using postcards, we've been using them on cardstock. We made a change. All of the assessment notices are printed on plain paper. They are in first-class envelopes. They are sorted by address. So if you're getting more than one assessment notice at your house under a different name, maybe you and your wife have your properties split up separately, or you're getting someone else's, somebody you're taking care of, they're all together in the same envelope. It's just the way our program is sorting them this year. So as people get their mail, instead of looking for a postcard, we'll be looking for a first-class letter from our office. One thing we're gonna start off talking about tonight is just a couple of the laws that our office always uses, what has changed in those laws and what is the same. One of the first laws that we have is all property shall be assessed at its full and true value in money. And they describe the term of full and true as the usual cash selling price at the place where the property to which the term applies shall be at the time of the assessment. Those are laws that have been in place. They did not change. Those are laws that we still continue to use. Another law that has been in place that we continue to use as the Director of Equalization must make the necessary changes to valuations before the assessment notices are submitted, sent out, so that the median level of assessment represents 85% of the market, and that's the median of the market. So now we're gonna get into a few of the things that have changed, which have entered into the assessment decisions this year as we reviewed our sales. There's always been a law out there since 1999 that says if a property sells for 150% more than it's assessed at, we never used that particular sale in determining the value of other properties. We call it the 150% rule. If something fell into that criteria, you set it aside. You did not use it in the analyzation of your assessment stream. Then that law was modified in 2008. And the modification of the law was that we could use those sales, but we could only add 5% at a time from those sales. And that law sunsetted with the tax bills that were mailed out in January of 2015. So starting with your 2014 assessment became the 2015 tax bill, that 150% rule is now gone. And that rule went out July 1st, so after the 1st of July, all sales, 150% or not, are now in the assessment stream, and those are the sales that we will make our decisions as to how we make changes.
200%, 300%, it doesn't matter, you'll
If it's a
you'll
good
use it.
sale on the open market,
Yep.
Meeting that definition of open market, it comes into our assessment stream that we analyze.
Yep.
If you remember back a couple of years, for those of you that were commissioners at that time, in 2013, we updated our cost table. That's the manual that we use to value residential
Yep.
properties. We had moved it from the 2006 cost table to the 2012 cost table and put that on for the 2013 assessment year. We can't put it on at the exact time because we will get it in arrears. We'll get the 2000 cost table after it's completed. So we implemented it for the 2013 assessment year. And what we do when a sale comes in, I'm just gonna give you a short scenario here. This is an actual sale that took place in Madison. It sold for $125,000 and it was assessed at the time of the sale at $97,600. So what we do is it was $10,900 of land and $86,700 of structure. That together gives you your total. So if you determine what the ratio was, what it was assessed for, what it sold for, it was 78%. How we determine the direction that we should be moving our assessments is if we take the sale price, subtract the land value, and it gives us the residual to the building. When we do our assessments, how we create a value of a house is like insurance, we take your replacement cost new. In order to get the replacement cost new where we were assessing it at $86,700, we were applying 42% depreciation against that house. And that's kind of fits in the stream of how we were doing it. If you look at the sale, in order to get the residual that was left over to the building, it tells me that actually the buyer of that house probably applied closer to a 23% depreciation against that house. So that kind of shows you the disparity that we were running into. And so what we did for 2015 is when we updated our depreciation table, took the same sale price, the modification that was made to the structure values for 2015 gives us a new ratio of 82.8%. That's kind of the format that was used in the assessments that were made in Madison for 2015. Now, we're gonna say, well, why did we change? This is how our ratio assessment stream played out for what the properties were sold in Madison during 2014, which is what we analyzed. 17% of the properties that sold in Madison were under 70% of a ratio of their assessment to their sale price. Then we had 31% that was 70 to 80%. So that is 48% of the total sales in Madison were below 80%. The 23% right here, which is less than a fourth of them, probably fall right into the area that we would like to see those sales fall into. And then we have those that were 90 to 100%, became 13%. And then there was 17% of those that were over 100%. And we do realize we are still having some of the houses come out of foreclosure, and there are still some special circumstances that the assessment was not realizing at the time of the sale. Maybe something happened to that house. Maybe they had, we had a house that had a fire in it. So when it sells, well, we assessed it before the fire, and it's all, those are the kinds of things that we're going to run into as we analyze those streams. So,
And that was 2014?
These are the 2014 sales that were analyzed for the assessment stream for the 2015 assessment.
Assessment stream, okay.
I gave a handout, and we did list the breakdown of the sales within the city of, the residential sales within the city of Madison. And you can kind of go through and look. We were kind of surprised that some of the properties that maybe we were assessing at $50,000, we were seeing a stream of them sell for $70,000. Well, where's my $70,000 houses? Oh, they're kind of up there in the $90,000. Everything is just moving up on us. And so to try to keep us in compliance with the rules that we have from the Department of Revenue, we made these adjustments and changes, and we're gonna see how they play out against the 2015 sales that we'll analyze for 16. If you have questions from property owners, we will gladly visit with anyone. Maybe we can spend a little more detailed time with them, looking at properties very similar to theirs, trying to understand this maybe in a little more of a, in a setting that would apply more directly to their properties. If you have questions or concerns, we'd love to visit with you. If you hear from property owners with questions or concerns, we'd love to visit with them also. You will be sitting as a Board of Equalization the third week in March. I think the appeal dates are, you written notice to the local board, should they come forward to you, on or before the 12th of March, which is the Thursday preceding the third Monday. And if you have any questions, call us. If they have any questions, please send them our way. We'd like to keep this format of appeal being very, very informal, very grassroots, not trying to make it overly complicated or intimidating. I'd rather spend some time to explain what's going on than have them be concerned or have a question as to why some of these changes are necessary. Any questions for me?
What's the most common appeal, I guess?
More common?
People just don't like what they're assessed at?
Well, the most common that we hear is, my taxes keep going up, my taxes keep going up. The appeal process is for the valuation of your property at market. It is independent of what the taxes go up or down. But we all know that's what drives the
Right.
taxes. A lot of times we hear from people who just aren't really familiar with a lot of what's going on. They don't follow the market of real estate. They're not aware of what's happening out there. We are very lucky that in Lake County, and especially in this part of the area, our real estate market has been very, very stable. We haven't been impacted by a lot of dramatic swings. So the real estate world is a very good economic base for our town.
So you said all the 150% rule is sunsetting?
It went out July 1st of 2014. It is now gone. Yes.
So the ag land values, some of those huge sales, will be hitting them next year?
Okay, ag land is totally under the productivity method.
Okay.
They went away from market in ag, 5 or 6 years ago, and we do an analyzation of the income stream. And just for a point of conversation, ag land, the crop-based soils went up 15% this year in the entire county, and the non-crop, which everyone calls grass or pasture land, went up 25% throughout the entire county.
Good and bad.
Well, it is what it is.
Yeah, it's a good way to put it.
Well, it's the numbers that were put together by law, and they're applied
Yep.
throughout the county, and it is based on the law that's in front of us.
Yep.
Any other questions for me?
Thank you, it's a good
Thank you,
presentation.
All right, I'm
Yes.
ready to move out and let the next person come.
That's you, Chuck.
Do you want a
Thank
motion
you,
on it,
Shirley.
Shirley?
Move on a little bit before it shuts down. Nope.
Would you like a motion on that, or can we just move on? Okay.
Okay, let's just move on.
Not needed?
Not needed. And I work closely with Shirley. Shirley's on speed dial. We talk about all of these when they come through. We only had one last year. I just looked it up, Shirley. It was a flood buyout property. Remained as was.
We,
And the only one that we've ever
just acknowledging it.
even changed, said back, was it 2 years ago, that expensive house?
Oh, yes.
Was that 2 years ago that we did
Yeah,
that?
we had some appeals at that.
Mhm. I think in my 5 years, we've only ever actually recommended changing one.
And
I
I think
think.
that was based off of some documentation that they bought for that they shared
Right.
with us too, and we accepted that.
Yeah, yeah,
Thank you, Shirley.
yes.
Yes, thank you.
Okay. Moving on to appearances number 2, acknowledge the application for temporary alcohol license and set date of hearing for St. Thomas Aquinas Church.
Okay, you have within your package, you have the notice of the public hearing and also the application. This is for a wine tasting fundraiser that the St. Thomas Aquinas Church has on a routine basis, annual basis. However, we need about 3 weeks turnaround on these temporary alcohol licenses, and we didn't have that on this one, so we changed the procedure just within our office to make sure that they could get their license. Still meeting all of the requirements on the state end, we just changed our procedure a little bit. What that means for you is that the notice was already published. It was published last week. The 7 days will transpire between the notice and the hearing. We will have the hearing next week if we can, please, which will allow them to have their application for March 14th.
During Lent.
I know.
Well, yeah,
The Vatican Bank, no more.
because historically, it would have been 2 weeks from tonight, right?
Yep, But again, we just changed our procedure a little bit. We published before we acknowledged, which we can do.
Well, I'll make
Okay.
a motion to acknowledge application of temporary alcohol license and set a date of hearing for Monday, March 9th at 5:35 PM in the year 2015
And
here
I'll
at
make
City
a
Hall.
resounding second on that.
We have a motion and a second. Is there any further discussion on the topic? All those in favor of setting the date of hearing for the temporary alcohol license for St. Thomas Church, say aye.
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 Opposed? Motion carried. And under appearances number 3, acknowledge the 2014 annual report.
Okay.
Is that you, Jen?
That's me, yes. I passed around, all we're going to do, I received the annual report this morning. It is 50 pages long. I can't imagine you want to go through 50 pages of financials tonight. We are going to piece this to you in the next several weeks. The document that we're going to go through tonight is the document that we are required by law to publish in the paper. Okay? During, several weeks ago, we went through some sales tax revenue, and we talked at that time about the cash basis accounting as opposed to the GAAP basis or the cash accrual accounting. So I'm going to just remind you that all of the documents that we have here, our annual report, the city is required to use the cash accrual basis of accounting. So there have been all kinds of year-end adjustments made to the financial statements, okay? I have all kinds, this is my actual adjusting entries that I do on a yearly basis, okay? What is adjusted? On the revenue end, we adjust sales tax receivable and property tax receivable. Also other state revenue, alcoholic beverage fund, what we have coming from the government highway bridge fund, special assessments that are due and payable, unbilled utilities. So from the last billing date of the cycle to the end of the year, we adjust the revenue for those unbilled utilities. Any kind of accounts receivable, which would include fuel that has been billed out and not paid, and then also interest receivable. On the expense side, we adjust for wages payable. So from the last pay date of the December payroll run through the end of the year, we adjust for all of those wages that we owe in between that time frame. Also the vacation and sick leave payable, the OPEB payable, any sales tax, prepaid insurance, debt service interest that is due and owing, and then also some uncollectible utilities. Last but not least, we adjust for long-term debt, capital outlay accumulations, which you know better as designated reserves, and then also fixed assets and depreciation, and that's a huge one. Spent a lot of time this year cleaning up some fixed assets and some depreciation schedules. All right, so 3 pages worth of this annual report here. The first page, the first couple pages are the governmental funds, again, on the accrual basis. General fund, you'll see the property taxes at about 1.6 million. General sales and use tax, over 1.5 million. I'm just gonna pick out a few of these larger ones here and kind of tell you what is included in those revenues. Licenses and permits, the $76,955 are your building permits, your liquor license fee, your video lottery licenses, and then also your public service, sidewalk permits, plumber license, electrical license, all of those public licenses feed into that line item. State grant, we got a little over $9,000 in state grant this year. That was subject to the police department and then also the fire department. Got a couple of grants to the tune of $9,600.
The grant we got for weed spray being there too.
Yep, that's in Park and Rec.
That's
coming up
one
next
line over, yep.
Yep. Okay. You'll see a couple larger dollar items for state shared revenue and county shared revenue, and that's exactly what that is. That's the revenue that we split with the state and the county. Bank franchise tax, liquor tax reversion, motor vehicle licenses, also the city portion of the motor vehicle licenses that we get from the county. Towards the bottom there, some rentals, $95,000 in rentals. Those are primarily the franchise fees and then also the cell phone tower rent that we receive from both of the cell phone companies.
Go up just a couple there. Court fines and forfeitures, Out of all the tickets that the police issued, we only recouped $1,410 of that? Is that correct?
That is correct. Do you want a breakdown of what those are?
No.
Okay,
No, I just surprisingly,
Yeah, that
yeah.
seems low.
that's it. Yeah.
Well, not by the time everybody else gets their cut, but. Well, that's what supports the court's
Schools.
uniform.
Understand.
Yeah, and the school gets a bunch of it, and,
Yep,
but to see what actually winds up back here is,
interesting.
Yes.
Court fines, actually, gets, the court fines,
yep,
or excuse me, court fines and costs are the $1,400, the $1,410.
yep,
$1,400 is, the line below there is actually the NSF check. So if you write a bad check, we tack $40 on, that's what that
That's how many-
$1,400 is.
okay.
there. Okay, so it's even less than it looks as far as court fines and fees. Any other questions? Good question, thank you.
that's a double, so the 1,410 above that isn't really that?
The $1,410 is the court fines and fees, so that's like restitution, juvenile
Okay.
restitution, money that we're getting from the county when they're paying us back little by little for whatever we are.
Oh, that's not actually for a ticket?
No, court fines, okay, court fines is the $1,400, and the other, as
Oh.
I said, is the
The other,
NSF check.
other is bad check.
Right.
Okay. So they're, oh,
Parking tickets, I can carve that out for you later, that's lumped into one of these other ones above there.
parking tickets is?
Yes,
So that is not part of the 1,410?
correct,
Okay.
okay,
It might be under public safety, maybe.
we'll find it.
That's
I
fine.
can't.
Well, even if if it is public safety, it's only $585.
Yeah.
It probably is. Okay.
Any other questions on general fund? That's the biggest one. Okay? Column to the right there, Park and Rec, yes. Corbin, you'll see the $10,903.
Right. I jumped the gun a little there, thank you.
That's all right, that's all right. Total of $90,000 in revenue, and that's just going to be your swimming pool fees, anything Park and Rec revenue, which we all know isn't a lot. Swimming pool fees, winter rec,
Mhm.
summer rec. Okay?
But not the community center.
Correct. We'll get there. Community
Okay.
center is an enterprise fund, he's gonna be on the back
Jumping the
page.
gun.
Okay?
Okay,
And again, this is just a synopsis.
Mhm.
As I said,
Yep.
we're gonna go through this in greater detail in the coming weeks, and you're gonna have lots more breakdown of these numbers, okay? Third cent fund, you'll see the taxes there, that is our bed and booze tax for $178,767 in revenue. Community development, the $14,000 as listed there is simply interest on the 2 community development loans that we have. Right now, you'll remember we have a community development loan with LAIC and also with Rosebud. And principal does not hit revenue, it hits balance sheet account, this is the interest on those 2 loans. Second cent sales tax fund, you'll see the same $1.5 million that you just saw across the road there on the general fund. Remembering that 1 cent goes to the general fund and 1 cent goes to the second cent fund. Special maintenance fee, that is the front foot assessment, the very first year that we have collected on that. Total collections there are almost $200,000. Swimming pool debt service comes through with our property tax, that's cut and dried, money in, money out to pay the bond. Grant Circle is also money in, money out. We collect those via property tax. We turn around and send that back to the state, to the South Dakota Housing Authority to pay off those TIF funds, TIF bonds there. Okay? Little or no expense there in the Jerry Maloney nature area. Questions
That's all
on
the
revenue?
interest they pay on all that money?
Yes. Interest, I think right now, the biggest interest we're getting is 0.9%.
And the rest of them are a quarter of that, right? I mean,
Or what?
well, we have one that
0.9 's
was
pretty
paying
high.
0.9?
Is what you're saying, 0.9's
Well, I
high,
think the
or-
rest of them are all like .024 or less.
Yes,
It's-
as noted every month on your investment report here.
Yep.
0.10, 0.90 is our biggest one there, okay? 0.01, 0.03. Takes a long time to do much. in
Money's
that.
cheap right now.
Okay, if you don't have any questions, we will move to the expense on page 2.
One, on this, let's see. You mentioned cell phone, what were the cell phone towers and the
Oh, rental
franchise? What
income.
was that under?
That's under rentals.
Okay, rental.
Under general fund rentals, we've got $95,951.
That was for,
Franchise fees from the 2 cable companies.
Okay.
And then also we've got 2 cell phone tower
Tower,
that we
yeah.
get monthly.
okay, thank you.
Okay?
We don't just keep that in the water fund?
No, goes to general fund.
Even though I think it is on the, those are on the water
They're on
tower.
the
Yeah.
water towers,
Yeah.
general fund money. All right, expenditures.
Good try, though.
Yeah, we should transfer that back out.
Let's move along.
Moving on. Expenditures is pretty much here on page 2, broke down by fund, or by department. Some of the larger departments, the police department at almost $1 million there. Fire looks very high, $251,000 for the fire department. There are a handful of retirements in there. Okay,
Right.
you'll remember that those retirement monies have to come to us, so that inflates that fire department number there quite a bit.
But it's not actually, it's the pass-through, it's not,
It's the pass-through.
it's not actually our money, they have their own retirement account, but it comes funneled through here in the
For
form of a
tax
check,
purposes,
yeah.
we need to run it through here. So I wanna say we had 1, 2, 3 at the end of the year, maybe 5 retired.
Is that
fire-
inclusive of South Dakota retirement?
No,
Okay.
that is a piece of their retirement. They have their own little retirement plans
So
for
that
their
isn't-
volunteers. And
So-
as Nick said, we're just the pass-through.
Do we have an income that wipes the expenditure out somewhere?
We do, but unfortunately, it is lumped in with other things. here,
Okay.
Okay? I can guarantee you it's a wash, as far as, they even pay us back for the taxes. We pay the taxes, they reimburse us for the Medicare Social Security tax. Okay, airport is another one that looks quite large, $250,000. That will, though, of course, include our sales, or, excuse me, our purchase of the fuel. So that inflates that number quite a bit too. Library is just high, almost $500,000 there on library expense.
But that's what we gave them, so,
That's what we
Right.
gave them, yep.
yep.
Some new furnaces and
Well, that covers everything library, that's their salaries and their
Correct.
utilities and.
Complete department.
Yeah.
Yep.
Mhm, complete library. Questions there? General fund at all? Otherwise, park fund, you can see the same there in the second column. Expenditures from the park fund. Second cent sales tax. Expenditures out of there. Special maintenance fee. You guys approved some dollars already used out of that special maintenance fee. That's for the coring and stuff that we talked about.
That was the
within
work that
last
Banner
couple
did,
weeks.
yeah.
Yep. Okay, the 6,000 that's coming out of that.
Isn't that the SDSU study?
Yes, sir.
Okay.
Okay, so once again, total expenditures, and then also the transfers in and out. Remembering that we do a lot of transfers between the funds to help support the funds. That last section there, that ending balance, that talks about non-spendable, restricted, committed, that is simply a breakdown of our fund balance. As per GASB regulations, all of your fund balance falls into a specific line item. And there's all kinds of rules as to why it's restricted, why it's committed, why it's assigned. All right? Last number on that page there, the $3.9 million that it says governmental long-term debt. That is the swimming pool debt service, the Lewis and Clark debt service, the Grant Circle TIF, all of the general government funds for the accrued vacation, the accrued sick leave, the OPEB, and also the motor grader debt service, for a total of $3.9 million in long-term debt. Page 3, proprietary funds, which we know better as the enterprise funds. Do not have near the breakdown here, but again, we will get into that in coming weeks. So pretty much what you have here is revenue, expenditures, once again, your transfers in and transfers out. The same breakup of the fund balance there in the ending balance, again, with your long-term debt And that long-term debt does include the same things that we just talked about, the bond payable, the vacation, the sick leave, and the OPEB. Do note, the community center there is a little bit upside down, and I was anticipating that. We do, you do have to factor in that transfer in of 94.5. We did do some supplementing for them at the end of the year, but we need to look into this a little bit further too. That's a little bit upside down in expense over revenue. The rest of the funds look very good.
It's on the radar.
Yep. Last but not least, your depositories down there. That is at the end of the year, December 31st, 2014. Those are the balances we have in every single bank. However, we missed a number on the First Bank and Trust, and we have got $7,848,290.17. And that will be adjusted. I will get a new report tomorrow. I have contacted them about that. So bottom line, we have got about $15 million in cash at this point. Okay? Once again,
That's free, that's not free available cash, that's.
it's not, no.
That,
Good point.
that covers all the,
That includes your
Bonds
designated
or-
reserves. Yep, all of your bond reserves that you have set up for the payment of the bonds. Right, that's not liquid cash by any means.
right.
Be nice.
So
if it
Fred's,
It would be nice if it
Fred's
was.
equipment reserve and everybody else's reserves are all in
It is
cash,
lumped in, correct,
but they're not sitting there
right.
as mad money.
Would that also include the community center 450?
Yes.
Okay.
Okay.
Mhm. That maintenance and repair reserve, the 450,000, yep, that is part of
Okay.
this too. So once again, unless you have questions, I would ask for a motion, Nick, to acknowledge this evening, this report here, and again, I will continue to feed you pieces in the next 3 to 4 weeks, and we'll go through some of the enterprise funds and also back through the governmental funds on a more complete basis.
I make a motion that we acknowledge the annual report.
Second?
We have a motion and a second to acknowledge the 2014 annual report. Is there any further discussion?
Would you go back to page, Mr. Chair, would you go back to page 2 for a second? That last
Absolutely.
figure of $3,906,000. You said that was the,
Say that again, where you at, Kelly?
The second page, the
Yep.
bottom
The
figure.
long-term debt.
Long-term debt, that includes the swimming pool.
Uh-huh. Swimming pool debt
grant-
service, so
grant-
what
grant
we
cer-
owe for
yeah,
the swimming pool.
Grant Circle.
Lewis and Clark,
Lewis and Clark.
Lewis and Clark pipeline.
There was one other one that you mentioned?
All the leftover vacation, sick leave, and pay that is payable if somebody wants it.
Unpaid.
Exactly,
Yeah.
we have to book all of that as a liability. Okay, so it's vacation, sick leave. OPEB is the health insurance that we are required to have on our books as a liability. And then also the motor grader, that was the final one there,
Okay.
Kelly. We've got a motor grader debt service that feeds into this.
Isn't that over this year?
This year, we made the final, this is 2014, we paid it off already in 2015. So yes, it's a done deal. He will go away.
Good.
How much total long-term debt do we have?
More than you want?
It looks like it's
Yeah.
close to like
Maybe
15
it's a
million, and
question.
it's about how much cash we have, so.
That will come to you on a separate cover here. Let me find it.
Thanks, Kelly.
17,300,000.
Thank you.
Where's that in reference to the bond limit? It's better than it has been previously, but
Better than it has been.
But do you probably
That's
don't- do you
a
have that
million-dollar question, no, because it's separated, because
Okay.
there's a general fund bond limit, and then there's a water sewer, okay? I can have, when my auditors come back here for audit, I can have them recalculate that, it's been a couple years,
It'd be nice to have.
Yeah.
we can.
just so you
But
don't get
keeping
any
in mind
crazy
that
spending
we-
ideas.
No, of course not. Let's,
We have paid some of it off, but we just booked the $3.5 million for the
On the
water treatment plant. I wanna say last year, the $17,000 number that I just gave you was 16. So one step forward, 2 steps back.
It's always,
It was 16 last year.
I wanna say it was
17
16
something.
last year. I don't have last year's annual report in front of me.
So
so,
what's the step forward?
well, no, we probably paid off 2 million, but we put 3 million back
Right,
on it,
okay.
so.
Right, exactly.
Treatment plant.
The treatment plant itself is the step forward. The debt is the step.
No,
Well, it depends on how you look at it. Step forward, we have to
They
do
paid
that.
off 2 million and
They
borrowed
paid off
3
2 million
Yeah,
and
pay
borrowed
more.
3. So the number went up 1.
Yeah, I just couldn't quite correlate how we'd be 17 million, actually another $1 million in
In
debt. and say that's a
dollars.
step
Right.
forward.
Right.
Thank you.
Yes.
But we don't have any big expenditures coming that aren't cash flow this year or next
That
year.
I'm aware of, no.
So that number will go down.
How many
for a change.
unanticipated ones come up yearly?
Well, the big one's the water treatment plant. We knew that was coming for a while.
Alright.
Would have been water tower, but we kind of dodged that.
We're recoding that and hopefully get another 15
Correct.
years out of it.
That's in the 2015 budget.
Yep.
Use of reserves primarily for that project.
So barring any big.
No, there actually
emergencies.
aren't a whole lot of big,
Event or another.
huge
Yeah.
projects coming up, at least for right now anyhow. The water treatment plant's done, the waste plant has just been done. The electric generating plant it's all been done.
Right.
Money going out should slow down for a while, hopefully, yes.
Now we're just
Yes.
trying to save a little for infrastructure in town.
That's right.
Yep.
That's right.
Well, and as some of those things are paid off, there will
Alright.
Free up some of those.
free up
yes.
some of that money, yes.
Providing the sales tax and the property tax and all of the good things remain status quo.
It's an exciting time to live in Madison.
Is that the call the question motion?
Yeah, I don't want to call the question, it requires a vote, but yeah, that's what that was.
Are there any further discussion on the topic? All those in favor of acknowledging the 2014 annual report, say aye.
Alright.
Aye.
Opposed? Seeing no, motion carries. Seeing no old business on our agenda, our new business contains personnel suggestions for your action.
I noticed some scribbles on here. when I was looking at it. What's going on there?
As far as dates,
Community center payment, or what we're going to pay them per hour.
Oh. When they moved it from salary to
Oh,
rate?
did they
is that
flip it?
I think they put them in the wrong line.
Okay.
Oh, yeah.
I'll make a motion to
Yep.
approve
Personnel
personnel.
Second.
We have a motion and a second to approve the personnel actions. Any speaking to that motion? All those in favor say aye.
Aye.
Opposed? Motion carries. We have concluded our agenda for this evening. Is there a motion to adjourn?
So moved.
Second.
Any discussion on the motion? All those in favor?
Aye.
Hopefully the snow
Aye.
misses
Vote
us.
for it.
All right.
Motion carried. We are adjourned.
thank you, sir.
Thank you. Thank you.